Hi, this is Randy Finney with the right side of the chart, and today is Friday, October 6, 2017. I wanted to do a quick pre-market update, things to look out for today. It's about a little less than an hour before the market opens, and here's a few things that stand out to me today. In the trading room yesterday, that's what we're looking at here. A little before the close, I mentioned that the euro US dollar was testing that 117 support level once again, and that a sustained break below would be near-term bearish, which is still in line with my preferred scenario. We've cracked a little bit below it. This is a daily chart here. There's that large, divergent high, the cleanup trend line, the breakdown, bounce back to my bounce target, and then a move down. And now we've cracked below there. It's not an impulsive breakdown, but we are below 117. The indicators you can see down below, the PPO, the RSI are still pointing lower. The RSI is not oversold yet, has not reached oversold levels. Doesn't mean it has to. The trend is up. But now this is what's giving me pause, and this is a reason I'm cautiously bearish. Although this has been my preferred scenario for a little while now, and it is starting to play out. That line needs to be down there, 117. You can see that we still have bullish divergence in place on the 60-minute time frame on the euro US dollar. So let's see if there's more downside. Let's see if we start moving down impulsively. If the euro starts to fall impulsively against the dollar, that will be bearish for gold. And let's also watch to see if these divergences are taken out, because this could be just a little flush out move down below that 117 support level with a reversal. As long as those divergences are in place, I certainly wouldn't short the euro or short gold right now, or GDX or anything like that. I'm just waiting patiently for the right time to set up where everything in the charts tell me, okay, the pullback that you were looking for in the euro is probably over. Now it's time to start positioning long in some of those names that I posted recently in the video. My favorite, some of the gold stocks that stand out to me for, not just short-term trading ops. Those were swing trade, trend trading ops. If we can position for the next leg up in gold when it comes, I think those were covered in a video. My 8 top picks, as well as some others that stood out as well. So here it is again from the daily chart. If that level goes, and this is still my final target zone, and I would be really excited to start, positioning long for in the mining stocks once again, if and when we get down there. Again, we may not. That's why that's plan A. Plan B is to see a reversal sometime soon and the charts start to firm up. But as of now, with the euro US dollar trading below that 117 level, the near term outlook is, again, I'll use the word cautiously bearish because I'm still seeing those 60-minute divergences, but they don't have to play out. Flipping back again to that 60-minute chart, we had divergence here. It did play out for a little bounce. We had divergence again here. It did play out for a little bounce, but very weak bounces. Now, this has all been one large divergent, continuation of those divergences. So again, that just I'd rather stand aside from that trade if that makes sense to you guys because of the conflicting analysis that I'm seeing. All right, next up, let's go back to the trading room. What else? Oh yeah, before the close yesterday, I posted sometime yesterday afternoon. A break of this uptrend line will likely bring IWM back to the 148 area. Here's a 10-minute chart that I posted. Very nice, well-defined uptrend line. Clean negative divergence. This is my scenario right here if you want to trade the pullback. And let's take a look at IWM, see what we're looking like today. Well, that chart really hasn't changed much. We limped below there, but we never had. I was also looking for, as stated, QQQ to give back that support level that it was on. It had taken out resistance, but that resistance had become support, and I need to see that level go. It may happen today, so I'm still on guard or on alert for that. And if we get it, then this will be a nice trade. I think we'll have a pullback to any or all of these targets again that I mentioned. As of now, in pre-market, IWM's trading down a little bit. We're at 150.15, so that just puts us a little below where we were yesterday. But the big thing is QQQ. Okay, this is what I posted yesterday on QQQ. 60-minute chart, just a series, go long at the divergent highs or look for trend reversals. You get a reversal. I'm sorry, divergent low back here, and you know, we wait till you see the next divergent high on the 60-minute time frame. You have a divergent low, That's a long entry, or at least an indication of a trend reversal. I should clarify, just because you have a divergent low, that's not a buy signal in itself. It's the breaks of trend lines, candlestick reversals, any other buy trigger that you can add to that. Divergent high here, you had a correction and pullback, and I noted yesterday on that pullback down here, wrong tool, clear that out, that we didn't have divergence at the low, and therefore we may not get such a powerful rally. The breakout yesterday was also below average volume. This breakout right here. Either way, this is a level I'm watching because this 146.59, it was a previous two reaction highs right here and right here. That's a pretty significant resistance level. There was a gap up. So far we're holding it, but the futures are starting to get back some early morning gains. We're at 147.16 as I type. So again, I'm looking at another monitor. You won't see it on this one. So 147.16, we're somewhere in there. Nothing big yet. Just something to watch out for. We had potential, well, barely by the skin of our teeth. Maybe they burned it through, but that's so small. The important thing is, and I mentioned this afterwards, below that post. Let me just do this for you this way. We still have the divergence from those previous highs is still in place. These are the lines. These would have been the more significant lines. In other words, we had a divergent high here. That divergence has only been extended now. There you have. So you have another divergent high. You decide how you want to play it. Glass half full, you play the breakout long, and you go long QQQ here. Glass half empty, you look at these divergent highs. You also have a nice trend line, which would trigger a sell signal. So you have an objective entry other than just negative divergence. You also have a little gap, yesterday's gap, to be backfilled. So, let's say if you are bullish and you did go long or still want to go long, then what you might want to do is look at this gap, the bottom of yesterday's gap. It's not unusual when you see a breakout to new highs to come back in, test those where prices broke out, or usually even slightly below. I like to see, or I very often see a dip below. It just runs a few of the stops, shakes out a little of the weak-handed longs, and then you see a resumption of the uptrend. And a gap would be a natural place to get a backfill of that gap, so the Qs don't leave any unfinished business. So there it is. If you're bullish and want to go long, look for that. If we get it, that would be a buy. And if you're bearish, you can look for number one, failure back down below that gap. But I think the early and the more, a decent sell signal would be a break of that trend line. So if you want to be safe, break of the trend line would be your first short entry. Second short entry would be if we give up much more than that gap, the bottom of yesterday's gap. And there it is. You have the divergence in place, and I see no reason that wouldn't be good for a swing trade down to at least that 143 level, if not more. So that could even be a runner trade where you short it. If it starts to pan out, set your stops at break even to assure you won't lose anything. Let it ride, or trail your stops down. That's another option. And yesterday, I also pointed out in recent days one of my favorite for pullback trade. I haven't listed this an official trade idea. Again, you guys, official, unofficial, it's there. The charts are clear. I think this one has a lot of potential. Maybe I'll add it as an official trade, but sooner or later it's going to start to play out. And if it does, then we've missed an entry. I've already positioned long. I think yesterday was a very objective time. It was objective on the breakdown here. You had that first target, and then we bounced back, we back tested. So we've had, numerous objective entries so far, and either this will play out or it won't. Sooner or later, the train will start to leave the station if it does play out, because we already had that breakdown back test, and we push back up to this resistance zone right here, which was highlighted yesterday. And as of now, I'm looking at the XLE and pre-market, and it's slated to drop down. It looks like around 68.15 or somewhere in there. So it's starting to move lower, but nothing impulsive yet. First bear sign would see a crack below this previous first target around 67.44. See these trend indicators slip down to bearish territory. In other words, the 9 EMA crossed down below zero. This 1333 EMA histogram cross down below zero, and this thing could start to get some traction. That's XLE. Now on the daily chart, you can see a couple things that stand out to me. We have this high level bearish PPO cross right here. You can see the PPO up at high levels, meaning way well above the zero line there. Curling over hasn't yet crossed, but when you get these clean separation lines, separation between the PPO and the signal line, the 9 EMA, and you get a bearish cross, those in themselves are sell signals. You have very extreme overbought conditions. We're just starting to roll off of. Let's look at the last time we saw that. You go back on this chart, back in late December, we had the same thing. Very clean separation on the PPO lines, a high level bearish PPO cross, and the only other time, at least for last year or so, that we've had an extreme overbought condition, not just a level 70, well above the 70 level. Well, as you can see, that turned out to be a monster shorting up. Um, Now, do I expect this? No, I don't. I'm looking for a pullback to potentially any of these support levels. Now, that's still decent pullbacks. XLE has moved quite a bit, even to that first target to a little over 2%, four and a quarter or so, and ultimately maybe a 6.5, 7% pullback in the energy stocks. Can't even rule out a pullback all the way down to back to this level here. That would be even more. So again, the potential's there. At the very least, I'll state it, unequivocally. I'm near-term bearish on the energy stocks, and think that they, at the very least, could be a quick pullback trade in there. This is XOP. This was a long down here. We caught at the lows, milked most of the run up, hit that potential unofficial third target, went a little bit above there, but it's stalling out. Same story. High level bearish PPO, extreme overbought conditions on the RSI. In fact, the most overbought this stock has been in years, at least to the left of this chart. This is a 2-year chart. So it just at the very least the risk reward is skewed now to the downside. Maybe we stall out here and consolidate. Maybe the pullback's minor, but again, the charts, 60-minute charts confirm it's not a screaming sell yet, but it's certainly an objective sell. The reason it's not a screaming sell signal yet is we still need these trend indicators to flip to bearish. Once we get these flip to bearish, once we see prices roll over here soon, ideally, at this resistance level around 34.50, I wouldn't even mind a little pop above it. It would just put in another divergent high, make a marginal new high. I don't know if we're going to get it, but even if we did, that's still very objective. And we already hit my first target zone right after the breakdown. We bounced back to the previous high. So if we fail here, you can swing it back down again to that first target zone. That's still support. And ultimately, at least a breakdown, I think, to this 32.30 level, my second target. And again, there's more. If you look at the daily charts, there's a potential for more downside in XOP. And forgive me, I think I covered this already. If not, just to loop back to the QQQ 60-minute regarding that IWM trade in the broad markets. For IWM to play out, we're going to need to see QQQ really give back this 146.59 level, which again, I don't know if I covered this. Those were the previous two reaction highs, and we took that out yesterday. There's also a gap there and a trend line. So again, I think I covered that one, but if not, that's what I'm looking. This would give additional confirmation for that IWM potential short trade. There's a divergent high. Look for a break of this trend line. Look for a break back below 140. So this would be, you could do it this way, check mark. There's check mark number one, break of the trend line. Check mark number two, break of 146.59. Check mark number three would be a break that QQQ moves down below yesterday's the bottom of yesterday's gap, which would be actually Wednesday's close. Once that happens, I think it's safe to say we're going down quite a bit higher. I'm sorry, quite a bit lower. I'm trying to get this out fast before the market opens. And finally, a couple that stand out. Grubhub, still an official trade. Now, this is refreshing so far, knock on wood. You guys have heard me say I've seen an unprecedented pattern of stop rates recently. I'm doing the same things I've done for years. And again, this is, I mentioned this in the trading room. I may have to adapt to market conditions by altering my risk reward ratio on the trades. I've usually used a minimum of 3 to 1, meaning risk 1 unit of downside loss for 3 units of profit. or dollar of loss or $3 of gain, as a minimum. In that they've just had and add to that, I usually look at objective levels that may act as resistance, and then try to set stops just above, at least on the short side, vice versa on the long. So we've seen a lot of stop raids. Fortunately, this one didn't. This is Grubhub. You can see we hit a high the other day on Tuesday of 54.62 versus a stop of 54.70. So, and it was a perfect back test, and it's starting prices have rolled over. So this one looks good because we're right around entry. This was a breakdown right here, and we've now rolled over after back testing. So this thing has no business back testing again. So Grubhub still has a lot of potential down to the targets, another 7-8% to that first target, about 14% down to the second target, and that reminds me of Fizz. The charts look the same. Um, Fizz is was had the stop barely clipped. The day it was clipped, somebody inquired. I said, look, the trade still looks great. In hindsight, also to beat up on myself a little bit, that stop was probably placed a little too aggressively, too tight, because it only allowed for a very small back test. See, what happened is we back tested and we pierced just above the suggested stop of 123, but it was a beautiful back test. That's all it was. Intraday, we popped above the trend line. You can see these wicks here, but both days we closed back down on the trend line, and then we reversed off it. So this one still looks good. I know some of you continue to hold it. I continue to hold this one. I think it's going to play out, but that's again, suggested stops just as a suggested targets are just that. They're suggested. You guys use your own. Um, and just make sure to account for it in this market. We've seen, at least I have seen, an increased rate of stop raids where well-placed stops were run just very briefly. And I don't know if it's the algo trading, the program trades, the fact that the trading desks out there can see all the stop loss orders. If you put a stop loss order, good to cancel, it's sitting out there on the exchange. The only way to hide that is by putting an order with your broker, where that order was then sent to the floor or sent to the exchange as soon as a certain criteria is hit. Those are a little more complex trading orders. But even then, who's to say that your broker is not selling that information to the highest bidder, which are these institutional trading desks that are going after the retail traders, just having a field day clearing stops. And then, point being that a lot of these trades that have been stopped out recently have gone on to play out exactly as predicted in the charts. So again, maybe time to buffer, loosen up stops a little bit just to account for these market conditions. But that one looks good as well. I'm going to wrap it up here. There might be a few other things, but I'll put those out either in the trading room or on the front page in a static post. I want to get this video out before the market opens. This has been Randy Finney with Right Side of the Chart.